So we're at TechCrunch Disrupt in Berlin today, and I'm joined by Ryan Fyfe of Workchain.io. Welcome to the show, Ryan.
Thank you for having me.
So tell us a bit about what you do and what Workchain does.
Sure, so I'm currently the CEO of a company called Workchain. Our mission is to build a real-time payroll solution that uses cryptocurrencies for the actual payouts. The reason I started this company is my former company is called Humanity.com. And Humanity has over 1 million employees on the system, and they do.
Just speak up a little bit.
A little bit louder.
Yep.
Humanity does employee scheduling and time and attendance. And so dealing with all of that data from employees, I thought, why do we have this approved time data that gets used for payroll weeks later when in theory it could be used immediately? And so that was sort of the genesis for the idea for Workchain.
So does that mean that if I work today, I can get paid tomorrow?
You could get paid the moment your shift clocks out, or what we're working on now is actually money streaming. So it's not you just get paid after your shift is done, you're getting paid as your shift is happening.
Okay, so I could be at TechCrunch today and I could go to the bar and I could start spending, the dollars that I've just earned for the last hour at the bar.
Well, our app's actually smart enough to know if you've been drinking at the bar, and it'll clock you out for that point.
All right.
No, so yeah, but that's the idea.
Okay, great.
Especially if you're salaried, right? Because literally, if you're salaried, what determines whether you get paid or not? It's like if you're still employed.
Yeah.
And so you're continuously providing value to the company.
Yeah.
And I think blockchains and especially Bitcoin, it started this internet of value. And so it's all about the two-way value exchange, and we think that should happen in more real time.
So I was going to ask, why do you use blockchain for this? What does it actually improve?
Yep. So there's a few things. So, if you've gotten paid, of course you have money has always moved very slowly, and that's because it's been slow and inefficient to move around. So we call it like money chunks. You get paid once a month because you have to go through the bank. You pay all of your bills once a time. And so what we're working on is technology called payroll channels. And these enable this real-time payroll to happen, microtransactions to happen instantly and for free. And that's one of the benefits of the blockchain technology itself that is just not possible in the fiat world.
And what's the benefit for an employer to use this sort of technology?
So we think that employers today have their payroll process that they're using, but there's going to be a real social benefit in that people are going to become more to expect this type of service.
Okay.
So if you're working, for example, in the gig or on-demand economy, the holidays are coming up, maybe you're driving extra hours or you're working extra shifts, picking up extra hours because you need those funds. That's value your company has got. And so what we're trying to do is, maybe move the fairness scale of the liquidity. Businesses have all the liquidity now. We want to move that scale down and help employees get paid in more real time.
And is there any type of businesses in particular or industries that you see this technology really taking off in?
Yeah, I would say the experience I had at Humanity dealing with the hourly workforce, that's a big pain point there. The statistics are phenomenal about how many people are working paycheck to paycheck. The payday loan industry is gigantic.
Yep.
And that's an example of individuals that, they can't make ends meet before the end of the month a lot of the time. And there's 1 billion people in the world that don't have bank accounts, which means they don't even have access to credit.
Yeah.
So, you and I, maybe with salary jobs, we can use our credit card as sort of to help us ride out those dips and flows. But if you don't have access to credit, or when you do have access to these forms of credit, it's predatory and you can't get yourself out of it.
Yeah.
These are the types of problems
That's
we're
fantastic.
solving.
Yeah, I like that. So I saw that you did you completed your first payment on the platform using the True USD stablecoin. So I'm just curious, how did that go? Like, what did that look like?
Yeah, so the first payment that we did was a few months ago, and that was using actually like a proof of concept integration with my previous company, Humanity.
Yep.
And so the idea there is, you come to work, you punch in, you punch out. Millions of employees around the world do this. And the moment that work is verified, we can take that trusted record and then immediately release the funds and make them available to you. So it's, real time, it happens on the blockchain. So it's, when we say real time, it still takes a few minutes.
Yeah.
But that's a lot better than next day or next month.
Which blockchain did you build on?
It's Ethereum.
Yep.
It's Ethereum based.
And so you use the stablecoin.
Yep.
So I'm curious, do you think that there's a bit of a commercial future for stablecoins outside just trading environments that we see them used in now?
Yeah, so I think stablecoins right now have a bit of a bad rap in some forms. It's kind of like, the initial vision for currencies was like decentralization. So when you take this asset, now back it by a third party that is centralized, that governs it, and then it's backed by fiat. It's sort of this strange paradox. But we believe it's the right balance to bring things mainstream. Because the reality is, even with the Bitcoin Cash, I probably shouldn't go too deep into my personal feelings about that. But it's like you have this...
Opinions are great.
Okay.
So,
But I think it's like,
not financial advice, so it's fine.
Okay, true. So you have these guys clowning around about the future of Bitcoin used as a payment system, but the reality is any asset that you view as a store of wealth or that you think is going to go up in value, you're not incentivized to ever spend it. I hate spending my Bitcoin.
Yes, yeah.
I hate spending it. And so when you have something that's stable in value, now all of a sudden you know that the money that you've earned is €1. When you go down to the shop, it's still going to be €1.
Yeah.
And so that gets rid of the volatility problem. And what we're trying to do is really consumerize this. So for people that aren't into the blockchain, managing your private keys, using MetaMask, using exchanges, this is a painful experience, especially then, and that doesn't even go into the volatility problem.
Yeah.
So with our application, you see one true USD in your wallet. When you go down to the shop with a future card that we'll be able to have, you'll be able to spend one USD the same way you would with your bank account.
Perfect. So talking about these stablecoins, right, and that not being volatile is a massive improvement over things like Bitcoin. Do you think it's possible that stablecoins will actually threaten the very nature of things like Bitcoin or Litecoin, which are actually meant to be used as payment channels?
I think they absolutely will. I think they will. I think you're going to have consolidation of what we consider like digital gold. Maybe it's Bitcoin, maybe it's something else. Then you're going to have privacy coins because people are going to be worried about privacy. There will be consolidation as the volatility works its way out. And then, absolutely, there really is no reason to have a payment channel that is volatile in this nature. Now, which version? I mean, all stablecoins are kind of tackling the stability problem in different ways. And some stablecoins aren't really stable. If you've seen what happened with Tether, and you don't even know if it's backed one-to-one, or it's kind of proven now that it's not.
Yeah.
So there still is a lot of stuff to be worked out before we get to that kind of holy grail of like stable blockchain-based payments.
Yeah. And so we're obviously here at TechCrunch Disrupt. So I'm just wondering, what are you looking to get out of the event this week?
Yeah, so we're actively fundraising. Our founders have bootstrapped the company up until now, and so we're looking to raise sort of our first round of outside capital to take the product further to market.
Yep.
And the other thing we're looking for is actually pilot users. And because our product right now really works with crypto only, there's a number of companies that are especially in the blockchain space that are already paying in crypto, and so we want to be out handshaking with them and trying to get them onto the platform.
Clever. And so what's been the most exciting thing that you've seen here this week?
Probably that race car over there.
Probably that race car.
The autonomous race car is pretty impressive.
I totally agree. That I still can't make heads or tails of what it's meant to do, but it just looks amazing.
Yeah, it's pretty phenomenal. No, I think it's always fun to be in this community. With my last company, we came to this event as well.
Yep.
And it's always cool to see all the different types of problems that people are tackling in different ways. And I think the trends are pretty obvious now with like AI, machine learning, blockchain. These are topics you wouldn't have seen here 5 years ago, and now they're the dominant ones. Yeah. It's pretty fascinating.
And so the last question that we have for you, we ask this of all of our guests, is when the clock strikes 12 on New Year's Eve and the champagne pops, what will the price of Bitcoin be?
Oh, God. Stock clock's 12 on midnight. I'd say we're going to rally from here.
Yep.
But I don't think it's going to rally like last year because the consumer money, the Tether shenanigans and all of that stuff is no longer in the system. So my prediction is we rally maybe to 5,000, 6,000, sort of a recovery more from where we were in the stability period.
Okay, so somewhere between 5,000 and 6,000.
Yeah, and that's, sorry, I'll leave it there before I...
No problem.